these PMIs, not good. What does it tell us about the overall growth picture in China?
Well, what we're seeing is China very much a manufacturing-dominated economy. These numbers are suggesting that there'll be a further slowdown in the manufacturing sector, and that will hit the GDP numbers in Q2 if this continues to play out. What we saw in Q1, about 7.7% growth. What we would expect is that growth rate to slow a little bit. However, again, it will still be robust compared to what we're seeing elsewhere in the world.
So slower growth in China in Q2, but still with a 7% handle?
That's probably where we're looking, and that will be good for the global economy in terms that China's not slowing significantly, but it's bad for the global economy because the global economy is already slowing, and anything that slows China slows everywhere else.
And if anywhere's slowing, it's Europe. We had Eurozone PMIs out today as well. Would you say glass half full because there was a slight recovery, or is it still very much a case of glass half empty because we're still contracting?
I would probably go more on the empty side. What we're seeing here is the Eurozone still, those numbers solidly below 50, still signalling a contraction for Eurozone GDP. And what we're also seeing is new orders and variables like that looking as if things will continue to contract going ahead. But again, it did ease a little bit, which is a positive in itself, but we're still seeing solid rates of contraction overall.
That was the Eurozone, the composites there. The big worry by a country basis still seems to be France.
It does still seem to be France. Now, Germany we're still seeing around the stagnation mark, and Germany is very important to drive broader growth. But the French economy, second largest in the Eurozone, still signalling very steep rates of contraction, and that's going to have a knock-on effect for other Eurozone countries, particularly in the periphery.
So taking it all together, what can we tell? What does it tell us about Q2 growth in the Eurozone? I know it's early days.
It's early days, but I think what we're looking at is a further contraction, extending that recession into a seventh quarter. We're probably looking at France coming in weaker than its 0.3% contraction in Q1 at the current rate. Germany still hovering around stagnation, which means there's no real pillar of growth to drive the Eurozone forward again.